GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. Of course, we're going to be covering some of the major market moves taking place right now. We typically try to focus on Forex, commodities, indices, and a little bit of crypto. The major markets that we look at are the euro and the yen, the pound and the Aussie, gold, Bitcoin, WTI crude, and the S&P 500. But if there are some extra markets you'd like us to cover, please drop a comment in the video. We'd be more than happy to do so. Whatever's in demand, we're happy to oblige. And if you are getting some good use out of these videos, please make sure to click that like button. That's always really appreciated. So let's have a look at that this euro chart. So last week we were talking about a potential double top pattern. Almost looks more like a head and shoulders pattern now, but the action below the neckline pretty mediocre. No some really powerful moves to the downside. Of course we did make some of the lowest levels since June. No powerful move to the bottom here. And it's interesting if we look on a weekly chart. These last 2 weeks, very bearish looking candles with long wicks on the top, closing near the lows, but nonetheless the body's not being particularly large. So certainly bearish candles, but not obviously had that big follow through downside week yet. So more in the kind of topping process at the moment. And obviously as we've started this week, we're getting some decent moves to the top side. I've drawn in these two zones, and I've had similar things drawn on the chart, and I think it's relevant at the moment because we're testing one of them. Basically you could look at it like the market dropped, fell into roughly 112.50, maybe 112, and has kind of it consolidated above 112 for a while, dropped through it, 112 became the resistance, then it actually dropped through that the next level of support, which I'd call around 110, and then we had that mad price action in March, and then 110 became resistance. We got the breakout a few weeks ago, and here's where we currently find ourselves, retesting this upper zone, if you like, around 112. So 112 is holding at the moment. And so I think probably the way to approach this is if we do get another move up to 112.50, then it's potentially a low risk opportunity for the market to turn down again at the neckline. But I think the more tests we get, that would be the third, arguably the fourth, if you consider this kind of false move back into the range. It looks like there's no massive demand for selling at the moment, and so if we get back above 112.50 and close above there, even on an intraday basis, to me that would be a sign that probably the bulls are winning out, and then we can look for a recess to the top of the range up near 114. And given that we're basically looking at a failed top pattern, they can actually end up being very powerful signals, bullish signals. When a top pattern fails, can mean some explosive moves to the top side. So why would that happen? Well, we could get some kind of breakthrough on the EU recovery fund. We haven't had it yet, and of course we could get some bigger sell-off in the dollar if the overall mood in markets improves, or maybe if we get some kind of extra liquidity actions from the Fed. So a few reasons. We could get some euro strength here, and it does look like this break lower is petering out a little bit at the moment. Let's see how we hold on to 112.50. Similar but different situation in the pound. This is our daily chart. Let's drop down to the 4 hour for a bit more detail. These were the two prior peaks. We got the false breakout, the retest of the peaks from the underside. Saw a big sell-off over the last couple of weeks, and where we've interestingly ended up is the 61.8 Fibonacci of that rally higher. So we rallied up to almost like a 5-wave higher, if you're interested in Elliott wave, a kind of ABC 1, 2, 3 correction, and potentially this is the base. I mean, obviously this was some big powerful sell-offs, but the moves down are always more powerful than the moves up, and so let's see how we can do here. We've just nudged above 124 today, and I like to keep these round numbers on the screen because really this is what the institutions are looking at the end of the day. And here you can see, for example, we dropped down from the peaks pretty quickly down to 125, got some false breaks below her, and then we got this particular signal here, which was a good candle to kind of show us that, well, that's those sellers tried to take control of the move below 125 and buyers took back control, and then we've got the rally up. But obviously after that big leg lower, it wasn't quite enough. Again, similar situation here where you had this peak, buyers tried to take control, sellers took over, and we ended up rolling over down to new lows. And same thing, we got through 124, but now we're back up above 124 again. So sellers tried to take control, and then buyers have come back in, picking up those sell orders below 124 and trying to make 124 the bottom, obviously where 126 and 125 failed before it. So potentially a reversal in trend here in the pound, something to look out for. This is dollar yen. This is a 1 hour chart. Potentially a double bottom here. We've kind of stalled out at the prior lows. You can draw a trend line through these past peaks, and if we get a breakout above there, maybe just in a conservative fashion, you get a retest of these you know, these highs through here, or maybe it's actually a double bottom and we get a move up to the top side. That would be the kind of reversal scenario, which is almost opposite to the euro breakout, if you like. It depends how the dollar's trading. If it's a just universal dollar weakness that sends euro higher, then you'd obviously expect dollar yen to drop as well, the dollar to drop against the euro and the yen. But actually, as it's worked out recently, is that actually the dollar tends to work as a haven, but just not against the yen. Let's flip over to the Aussie. I think the best way to describe this at the moment, I know I've got a few lines on the chart here, but just focus on this triangle. So we've had a big move higher, potentially a top at 0.7, the big round number, but it doesn't really look like a top at the moment. It looks more like, if you draw a line through the intraday closes, opens and closes, looks more like a triangle, and we're potentially about to get a bullish break beyond this triangle pattern here, and that would signal more upside and a break above 0.7. So we could obviously still get a last test of 0.7 and the top would be in. But for me, the price action doesn't look like that at the moment. We barely made any progress below 0.68. It looks like 0.68 holding, and we're just kind of gearing up for another push to the top side. Obviously, a move higher in Aussie dollar would fit with a move higher in euro dollar, but the two have not been super correlated since the rebound in March. Aussie been distinctly stronger, obviously. Now just have a look at gold. This is our daily chart, so we can kind of get the whole flavour of what's been happening in the last year, really. Got some significant levels much further lower. Really, the important price action of late has been over the last 2 months. We put this peak in, I believe it was mid-April, yes, April 16, April 14, and we haven't got above that 1750 really, but we're above it today. Now what's happened here is you can see that we had this kind of little intraday consolidation up near the peaks, and then we had that big crash lower. And so what's happened is the price has come up to where that consolidation was and just where the price really gave up. And that's the kind of top we're dealing at the moment. We've come back down to these peaks and we're getting a rebound off the peaks. So if this market is to be breaking out, and that is the title of this video, a real breakout in gold, we're above 1750. If we pull back from the highs, test these little lower highs down here, and rally up, that's all the ingredients we really need for gold to push significantly higher. Why would it push higher? Well, just I think a general belief amongst investors that central banks are going to keep printing a lot of money. They could either keep it at current levels, which are still huge record levels, or they could increase it. There doesn't really seem to be much estimation out there that central banks are about to start winding things back. Actually, it's interesting that Fed purchases have been declining since a big peak when they've really first started in March. That coincided with a bit of a sideways period in gold and in equities. So if we are on the verge of another big jump in Fed activity in bond buying, that could be what we need for gold to move to the top side. All right, let's look at WTI. So let's just remind ourselves in terms of the daily chart, we've been talking about 40 and the top of this gap for a while now, so it's potentially a double top with 35 as the neckline, but it looks like a nicely strong trending market still on the kind of more like a 4-hour basis chart. We've just obviously gone through a consolidation period. It's a relatively low risk sell, up between 40 and 41. We're just selling the highs with the idea we might get a kind of $5-6 drop from 40 down to 35 again if this range holds. But to me it looks more like we get a move to the upside. And so you can see that kind of the general idea I've got across these markets is that we get another leg lower in the dollar. So gold pushing higher, euro pushing higher, Aussie pushing higher, pound getting a recovery. So that kind of seems to be a theme that works across my interpretation of these charts. It'll either be universally right or wrong. Let's look at a more uncorrelated market here. So we're looking at Bitcoin. This is the daily chart, and you know it's very obvious that we're just consolidating beneath 10,000. Now my idea along throughout this consolidation has been, well, selling beneath 10,000, you know, with relatively low risk on the top side, and potentially a large reward to the downside is not a bad trade. But I think I've been caveating it most of the way along by saying this looks more like a consolidation than it does a top. And so by that logic, it should actually be breaking to the top side. Bitcoin's not really as reliable in terms of technical patterns, I would say, as Forex markets, although there is less computer trading in Bitcoin and more, you know, kind of real people traders. So that in theory lends itself to better patterns. What I've just drawn in this week is actually, if you discount this spike low through here, you can actually see there's a decent trend line through there, and actually works pretty well as a kind of parallel trend line along these highs too. So potentially, even if we don't get some huge move to the top side to 11,000-12,000, maybe we just get a top of the test of this range, which would still be a nice move higher from here, about a 1,000 point move higher here from 9,400 up to 10,400 if we're just testing this range up here. Look out for, you know, try and look out for RSI to give us kind of early clues, and it looks like potentially we're getting a little bit kind of move above this downsloping RSI trend line after having been oversold. Potentially the trigger for, you know, something similar going with the price through these highs, or if you're using closing prices, something like that. Maybe that's the price version, the momentum version has already broken, so look out for that. Last but not least, this is the SP 500, our proxy for the S&P 500. It's more messy than I normally like charts to be, but what I wanted to show you is, okay, let's start with the daily chart. We know from our last week's webinar that we ran into those previous lows. We made a peak up there, obviously the market sold off. This is all fairly good classic technical analysis where we ran into those lows, sold off, sold straight into the previous highs, stabilized there, rallied up, and where we've rallied to is this kind of golden area between the 61.8 and the 76.2 Fibbo area, and you can see we've had 3 tests through there. So the longer that goes on, the less likely that area is to hold, and one reason to think we might be on the verge of a little break to the top side here was we had that correction, then we had a rally up, and then we had a kind of pause for a week. Last week we did close higher, but just about. It was a bit of a mixed week, and we had a bit of a hard sell-off on Friday after having been at the highs. Dropped down quite severely, but if this is a bull flag, then potentially we're getting we're actually on course for new highs above those prior week peaks. So look out for that potentially in the S&P. Otherwise, that 61 to 76 area actually does hold in the end, and it is an area that's normally works well, and obviously has worked a few times here already, as an area that's if you get the first leg pull back and then the second leg starts in that area, so look out for that too. Perfect. Thank you very much for joining this week, guys. Good luck trading, and again, if you're appreciating the videos on the channel, please subscribe and you'll make sure you don't miss the next one. Thank you.